Cathie Wood joins me live now around the desk here at FII in Saudi Arabia. Cathie, great to have you on the program. Welcome to Squawk Box.
Thank you, Dan. I'm thrilled to be here.
So, Cathie, let's talk about what we're seeing in the markets right now, because I want your reaction first and foremost to this surge that we've seen in Qualcomm. It's going to be taking on the likes of NVIDIA and AMD. Your thesis is innovation. Do you welcome that pop? Is it just getting started? Where is it going from here?
Yes, I know a lot of people are worried about all the AI hype. But as we're looking to the future, especially with embodied AI, which is all about robotaxis and transforming the world of transportation completely, and then healthcare, which is probably one of the most profound applications of AI, we think that this investment will pay off. And I think the chaser is going to be humanoid robots. And I think that is going to be the biggest of all the embodied AI opportunities.
Well, Cathie, the concern in the market right now is that the pace of innovation doesn't necessarily justify the premiums that we're seeing for some of these names. How would you respond to that?
Yes, well, if we're right and the growth continues to accelerate in this space, we think that the growth that the valuations will make sense longer term. So you really do have to have a longer term time horizon, which we do. We have a 5-year investment time horizon. I'm not saying there will never be any corrections. Of course there will, as many people worry, okay, is this too much too soon? But if our expectations for AI, especially embodied AI in the way that I just described, are correct, we are at the very beginning of, a technology revolution.
Is AI in a bubble right now?
I do not believe AI is in a bubble. What I do think is, on the enterprise side, it is going to take a while for large corporations to prepare themselves to transform. It's going to take a company like Palantir going into the largest enterprises and really restructuring them in order to really capitalize on the productivity gains that we think are going to be unleashed by AI. In the consumer space, the consumer loves all of this, and I think we're all looking forward to our personal assistants doing our shopping for us. Well, I am. As I talk to people around the world, some people love shopping, so they may not. But I am really excited about not just shopping, but how much my productivity as an individual is going to increase with AI. It already has in terms of research.
Let's just stress test this point, because you said that AI is not in a bubble, but you also flagged that there could be a correction risk. What's the timeline on that correction then, if you were to gaze into your crystal ball?
I think we're going to reach a moment in the next year where the conversation will shift from lower interest rates to rising rates, but it will be for a good reason. We think that the economy, the US and the rest of the world, of course, will participate, is going to move into a productivity-driven boom, just in time for our midterm elections. So I think when interest rates reverse, there will be a shudder, because there are a lot of people out there, and we saw this during COVID and its aftermath, who think that innovation and interest rates are inversely correlated.
Guys, Cathie Wood just dropped another massive prediction, and it could completely change how you think about the stock market over the next decade. Love her or hate her, Cathie Wood is not afraid to bet big on disruptive innovation, and this time she's calling for something so bold that even Wall Street is raising their eyebrows. So today we're breaking down exactly what she said, why she believes disruptive technology is about to explode, and what this means for investors like you. Please hit the like button and do subscribe, because this one's going to get very interesting. Cathie Wood believes we are entering a period where multiple innovation platforms, things like artificial intelligence, robotics, blockchain, and genomic sequencing are converging. And when these forces collide, she says, it's going to create exponential growth, not the slow, steady growth we've been used to. And according to Cathie Wood, these technologies are stacking on top of each other, multiplying their impact, kind of like how the internet plus smartphone gave us social media and e-commerce.
That is not true over history. Even in 2017, when interest rates went up, we had phenomenal performance. I want to disabuse people of that notion, but nonetheless, the way algorithms work these days, we think that there will be a reality check, shall we say.
A reality check. Okay, so if we do come into this higher rate environment, as you're suggesting, then how should investors be thinking about allocating in the innovation space? Of course, we look at ARC up more than 50% YTD. Talk to me about some of the allocations you're making right now and this big bet on the future. Ultimately, what's going to pay off?
Well, one of the things we have focused on consistently is really, this is going to sound almost silly, but we're focused on the future and pure plays in the innovation space around robotics, energy storage, AI, blockchain technology, and especially multi-omic sequencing in the healthcare space. I think that's the most underestimated and underappreciated. So those are our 5 main areas. They involve 15 technologies, and we think they're converging to create really explosive growth opportunities.
What do you think has changed in the market that is rewarding your strategy again? Because I also think it's fair to say, since our last conversation in Abu Dhabi a couple of years ago, you've been through a pretty rough patch, right?
Yes, we went through a very rough patch. And in fact, during the 4 years prior to this administration, we were facing increasing regulation, a massive increase in interest rates, supply chain shocks, all of which impacted unit growth. And unit growth really drives innovation. The faster units grow, the faster costs decline. And so we're through that. And more important, in this administration, we have with OB3, the One Big Beautiful Bill, massive tax changes that are going to take the effective corporate tax rate in the United States down to what we believe is 10%. Statutory will still be 21%, but with the accelerated depreciation, massive accelerated depreciation in manufacturing structures, equipment, domestic R&D, and software, we think that that is going to turbocharge innovation in a way that people do not appreciate right now. And that is one of the reasons we do believe we're moving into next year. We'll see this idea of a productivity-led boom in activity.
And in her words, the next decade won't look like the last. We're standing on the edge of a productivity explosion. So what's driving this massive call? Well, Cathie Wood points to one key factor: AI is the catalyst. She argues that artificial intelligence isn't just another trend, it's the backbone of everything else that's coming. Robotics, autonomous vehicles, even medical research, they're all being supercharged by AI's ability to analyze data faster than ever. And because these innovations are interlinked, the impact spreads across multiple industries. For example, AI helps design better robots. Robots helps make EVs cheaper. Cheaper EVs accelerate the energy transition. Can you see the pattern here? This compounding effect is what Cathie Wood calls the convergence of innovation. And here's where things get wild. ARC believes these converging technologies could add trillions of dollars to global equity markets by 2030. In fact, Cathie Wood says traditional analysts are underestimating this opportunity because they still model growth linearly, but innovation, she argues, is exponential. So while others are worried about short-term volatility or interest rates, Cathie Wood's looking at the long-term compounding of innovation. And that is why ARC keeps doubling down on high-conviction names, companies working on AI, genomics, and autonomous tech, even when the market turns against them. And now, of course, not everyone's buying this vision. Critics say that Cathie Wood has been overly optimistic here, especially during the pandemic boom. ARC's fund took a big beating when high growth tech stocks crashed in 2022. So the question is this prediction visionary or another overreach? Cathie Wood admits that timing is tricky. Innovation does not follow Wall Street calendars, but she argues that every major technological revolution from electricity to the internet, went through periods of doubt before changing everything. Her message: don't confuse volatility with risk. Volatility is the price of innovation, is what Cathie would said, and that thing really hit me. Alright, so what can you take away from this? If Cathie Wood is right, we are heading into an era where AI, robotics, and biotechs merge, and the biggest winners will be the companies that sit at those intersections. This could mean massive growth in AI infrastructure companies like chip makers and cloud providers, rapid advances in robotics and automation, reshaping manufacturing and logistics, and breakthroughs in healthcare where AI meets genetics. But, and this is very crucial, these are not short-term plays. Even Cathie Wood warns that the market may not recognize their value immediately. Her approach is pretty simple. She says think 5 to 10 years ahead, not 5 to 10 months. So whether you agree or not, her vision challenges investors to look beyond the headlines. But at the end of the day, Cathie Wood's prediction isn't just about technology, it's about the mindset. She's betting that innovation will continue to accelerate, that creative destruction is real, and that long-term conviction still pays off. So what do you think? Is Cathie Wood seeing the future before everyone else? Or is this just another hype cycle waiting to drop? Let me know what you think in the comment section.